Hey everyone, welcome back to another weekly market outlook. This is going to be the first full week for the month of May. This is for the 6th of May 2024. Let's get started with a quick recap of last week. I think there's a lot to discuss in terms of last week. And obviously the main focus, it's going to be the US labor data. Now, if we take a look at the US labor data, I think three of the major data that we were looking at all come back pretty bad, right? So we have the average hourly earnings. This has dropped from 0.3% to 0.2% in terms of growth. So we're looking at less income, I would guess. And then we have the NFP numbers, and the NFP number is actually very interesting because the previous month was actually revised up from 303,000 to 315,000. So we actually got a higher number. Market consensus was for 238,000 to about 245,000, and we actually got 175,000. So we are looking at a significant drop in terms of the NFP gains from the US labor data. I think the surprise is definitely the unemployment rate. This one has picked up from 3.8% to 3.9%. And you know, this was really a surprise because if we count the weekly unemployment claims, we were kind of anticipating that we are going to get a lower unemployment rate. So this one here is a huge surprise to the market. But regardless, what we're looking at here, apart from the JOLTS job opening numbers decreasing as well, the weekly unemployment claims kind of points to, again, a lower unemployment rate, but instead we got a 3.9%, an increase of 0.1% in terms of the unemployment rate. So across the board, if we take a look at the US labor data, what we're getting is we have a weaker labor market. Now, is that bad for the US dollar? Theoretically, from the initial reaction, we should be getting a weaker US dollar, but longer term, is it actually that bad? It's not that bad. The gain and comparison to all the other countries out there, like the Eurozone, for example. The Eurozone, we're looking at an unemployment rate above 6%. We're talking about 6.5%. So the unemployment rate at 3.9% is still below 4%. It is actually not that bad at all. Does that have an immediate impact into the market? Yes. For now, we're looking at the US dollar probably hampered from gaining even further, so might be a little bit of a relief for all the other currencies that was previously pressured by how hawkish the FOMC is. But we'll take a look at it from a technical perspective in terms of how that's going to apply for this week. All right, so this week, a couple of note here. We are looking at the RBA, which is going to be on Tuesday. Cash rate or the interest rate is likely to remain at 4.35%. However, there could actually be a warning that's going to come out from the RBA in terms of the increasing inflation there. So inflation in Australia, it's very similar to how it is in the US. It's really stubborn. It's not really coming back down. In fact, the last inflation number that we have from Australia, it actually picked up. So the RBA is likely going to mention this, and they might actually sound a little bit more on the hawkish tone. Instead of saying that they will do a rate cut, which is what the market is expecting for 2024, they might say that if inflation continues to pick up, they might be on standby to potentially hike rates again. And that would be more on the hawkish side, and that should actually give a little bit of a strength to the Australian dollar. So this is something to watch out for. Again, this is going to be on Tuesday, 7th of May. And then on Thursday, we are going to have the Bank of England interest rate decision. In terms of what the Bank of England is likely going to do, we're still anticipating a potential rate cut probably in the month of July or August coming up from the Bank of England. But in terms of whether or not they're actually going to be adjusting their rates this month, we're not expecting any adjustments. We are waiting for comments coming up from the Bank of England. Now, obviously, this is going to be interesting because the dynamics for all the central banks has been disrupted by how the FOMC is unlikely to cut interest rates soon, and they might not even cut for 2024 depending on how the inflation is going to be. So this is likely going to be commented from the Bank of England, and definitely very interesting to see if they are actually going to diverge from their previous statements in terms of potentially cutting rates in 2024. And we're still looking at around July to August for the Bank of England to actually act on it, right? Apart from that, we have the UK GDP numbers that's going to be on Friday, and obviously on Saturday we're going to get the Chinese CPI number. That's obviously going to impact the following week. It's not going to impact what's likely going to happen this week. So, all right, so that's pretty much it in terms of this week. I think the main focus is definitely going to be the RBA interest rate decision as well as the Bank of England. At least for the RBA side of things, we're expecting a little bit more of a potentially hawkish comment coming up from the RBA, just because their inflation in Australia is actually still picking up right now. All right, let's just jump in on the Aussie USD here. So we are looking at the Aussie USD gaining pretty significantly. We are right now outside of the current range of 64 cents to 66. We're still below that 66.50 range, however. And if we take a look at the movement on the Aussie USD, we have transitioned back up above the Ichimoku cloud. So for now, immediate support for the Aussie USD, we're looking at around 65.50. That's going to be the immediate support for the Aussie USD. And if comments coming out from the RBA tomorrow is hawkish and price is above 65.50, then we could potentially see another retest of that 66.50. Now the swing high from March, that's actually positioned a little bit higher. That's actually at around 66.70. So it'll be interesting to see how the Aussie USD is going to react if there's actually a hawkish comment coming out from the RBA tomorrow. So for now, we are still anticipating for that to happen. Obviously, we're looking at a stronger support at around 65.50 for the Aussie USD. So we are right now potentially transitioning. We have broken out of the current range of 64.66, but one more resistance at around 66.50 to 66.70. Now for the EURUSD, this is kind of a little bit mixed, right? We have that reaction coming out from post NFP. We saw price actually push up higher. But if we take a look at where the rejection happened, it happens at 1.08. Now, obviously, 1.08 is the previous sell-side liquidity for EURUSD. That was the key level to watch out for on the EURUSD. Previous outlook, we mentioned one of the key resistance is 1.0750, and if price should be able to breach that level, we're looking at a potential retest of 1.08. Now, basically what happens last week. Now, the dynamics here in the market is that on Friday, it actually closes above that resistance trend line on the EURUSD. It closes above 1.0750 barely, right? But for now, the main focus is whether or not the EURUSD could continue to test 1.08. And that obviously depends on what market is going to be pricing in for the next upcoming inflation from the US, which is still going to be about 2 weeks time. So we still have a little bit more time. So this is more on a technical perspective that this is currently above 1.0750, but it's still below 1.08. And obviously, buyers are not going to jump in en masse here unless it surpasses 1.08. So 1.08 is definitely the key resistance to watch out for. If price breaches 1.08 and manage to close above 1.08 on a daily basis, then yeah, we might see a little bit of an extension to the upside. We might see that test towards 1.0850 and potentially even 1.09. However, if price breaks down below 1.0750, then we're likely going to test support at 1.07, and breaking below 1.07, that would actually put the EURUSD back in a downtrend, and we should anticipate a further move towards 1.06, 1.0650 on the EURUSD. Now the pound USD, this one here, it's very interesting because if we take a look at the pound USD, we saw that snap to the upside. We got rejected at 1.26, but that's not the problem. If we take a look at the pound USD here, it never actually closed above 1.2550. So we're looking at 1.25 and 1.2550 previous order block. That was a support. Right now, it's still acting as a very strong resistance for the pound USD. Now, obviously, if we saw more of a dovish comments coming out from the Bank of England this week, then you know, as long as price doesn't surpass 1.26, that could actually send the pound USD a little bit lower. In terms of the support to the downside, we actually don't have a lot of significant support in between the range right now. We do have a little bit of a support at 1.2450, but the main support wouldn't come in at until 1.23, 1.2350 area. For now, if we take a look at the current situation on the pound USD, the momentum is actually rather flat. The current positioning is that this is technically still in a downtrend. So yeah, if we see another retest of 1.2550, 1.26, and if sales starts coming into the market, that would actually shift the sentiment back to a strong sell on the pound USD. So this is something to keep an eye out for the pound USD. Now, next up, we have the dollar Japanese yen. The dollar Japanese yen, we saw an intervention. I think that was immediately after we posted the video last week. The intervention kicks in, right? That was on Monday, and then on Tuesday or Wednesday, there was actually another intervention by the Bank of Japan. So with the intervention that we saw here, obviously they kind of have used up their allowance, right? They took about 7.5 trillion from the Bank of Japan for fiscal purposes, and in terms of the anticipated or what could have been the total amount of intervention, we are currently looking at the number between 7.5 to about 8 trillion Japanese yen, and obviously exceeded the fiscal budget that was asked for the month of April. We wouldn't know how much they actually intervene until we have the report at the end of May from the Bank of Japan. But right now, as we previously mentioned, if there's an intervention that kicks in, we're anticipating a 5 yen drop, and we actually saw 2 5 yen drops last week. And in terms of the key level where people are likely going to buy back into the market, we said it was at about 152. So that's basically what happened. Friday's NFP numbers send the dollar Japanese yen a little bit lower, but take a look at where it bounces. It bounces off exactly 152. So we might actually see an inflection point for the dollar Japanese, and we're actually looking at buyers coming into the market right now. Now, how far can they push this up? For now, we're looking at 155 as kind of the key level to watch out for, just in case if it does move too quickly towards 155. So we're looking at maybe a day or two of time frame. If it does reaches 155, the Ministry of Finance might actually ask for more money from the Bank of Japan to potentially intervene again in the market. Obviously, there's actually risk involved here, but if we take a look at the sentiment here, we're still looking at the interest rate differentials in the long term playing a huge part here. So we're still looking at buyers coming into the market at 152, 153, and that's kind of predictable. As we mentioned in the previous outlook, if buyers are actually going to come into the market, they're probably going to come in at about 152, 153, and that's basically what we got here. So we're looking at a little bit of an inflection point for the dollar Japanese yen. So we might actually be due for a little bit of a technical correction happening. We're looking at around 155. If it does exceed 155, we might potentially be looking at a move towards 156. But are we anticipating a potential return towards 160 at this point in time? That is unknown, because there's actually a huge risk going against potential intervention again from the Ministry of Finance in Japan. But regardless, I think for this week, we saw the inflection point, and I think we're likely going to be looking at more buying in the dollar Japanese yen for this week. So with that, good luck with your trades, and I'll see you soon.